our top. So we will start with first session of CFA ESG preparation program, which is a weekly session. We will have it every week. Today, I will give you the overview of that program, what is entails, what are the different modules, how much weight it carries, how we should approach, and also we will look into session module number 1 as well, that what it covers, 2, 3, 4. So we will have overall understanding of this program going forward. Right after this, we will be also sharing with you, a summary material for module 1, which will be pre-read. You will have 1 week to read, and then we will meet on next Sunday, where I will try to cover first chapter, which is Introduction to ESG. With that being said, let's start the program housekeeping. So we keep the same housekeeping, any Q&A, because you are a Diamond member. You can always raise your hand, ask question in between. There is no trouble with that. At the end, definitely we will have a separate session for Q&A. We will also have some surveys in between, asking you some questions. So be ready with that. On-demand video will be provided to you. And then any technical issues, our team member will help. So what exactly is CFA ESG certification? Of course, we have discussed in detail, and that's why I was running that video to reduce some load from me, who could not, follow it yesterday. So that video will be made available in any case forever. So you can always refer to it. What is in it for you? Of course, basic advantage, it gives you international recognition in the ESG field, and that too from a premier institute. That's the first thing. Second, of course, knowledge-wise, it helps you in sustainability investing. As a board of director, it definitely comes handy because you also do not only look companies from a sustainability point of view, but also you see as a sustainability, as a risk point of view, that how you are mitigating, but also it enables you to look into sustainability with the opportunity point of view. So how much of ESG initiative helping you as a profit making or profit center, it establishes that fact. It also helps you and give you enough tools and templates to understand, interact with the stakeholder as a senior member of a company, as well as it enables you to value a company with ESG perspective. That's a major advantage. So if you see the curriculum, the syllabus, which is laid out by ESG investing, and for that, I will take you directly to their website. Let's go to their website. Once that screen is visible. By the way, how are you guys? How are you doing, everyone?
Good, sir.
Good, Gaurang. Good to see you.
Sorry, sir, my camera is not working. I have to restart the system for that.
Don't restart. We keep continuing here.
Sure.
Okay. CFA ESG certification. Is my screen is visible?
No, sir.
Oh, okay. So this is directly their website. Of course, they have increased the fees again. As we have discussed in the previous season, they launched it 2019 at 600 and so dollars, and now that price has gone up to 890. This year, if you want to register, the only price available is 890. A scholarship has not been announced yet, so that is far distance stuff. It is certificate. It is definitely foundational level. Yeah. It requires you to have 100 hours of complete, learning. Out of that, as I promised you, 50 hours will be definitely, we will give you as a recorded session, the long videos on each chapter. You will have 3 to 4 videos on each of those chapter. So 50 hours covered there in the recorded. 20 hours in next 6 months, we will be sitting together. 3 months specifically will be dedicated to each chapter, where we will cover question, answer, mock tests, summary session on the chapter. And that's why we will give you the reading material before starting of the class. You have to read that. We will also provide you the book if you require. Of course, not the recent book because that is under copyright. We can't share that. But we will be referring that new book. And if you want to buy the book, of course, physical copy. A lot of people love physical copy. It's a 600 pages book. And anybody who is interested in understanding financial implication of ESG, it's a good Bible, and it is available on Amazon for 2,000, 2,500, I believe. So you can directly buy from Amazon rather than paying 890 and getting an e-copy. If you pay an 890 USD, you get an e-copy of it plus examination. This is examination fee. But if you want, I can share that with you, e-copy, a previous version. Self-paced online, this is they allow you to take this exam anywhere in the year. You have to be prepared for a 1 month notice. Generally, if you will see the dates available, this is a proctor-based exam, online as well as offline. Every seventh city in India is capable to take this exam, and it is available for you to choose from. You can select that and select that date. You can go there. It's a 120 minutes exam. 120, I think they have not yet increased. So it remains 120. We will see all that. Wait, just wait. And this exam happens at self-paced. You can take it even in home, but you have to make sure there is no sound, because even with the sound, they cancel the exam. Okay, then you have to go to and fro to get your refund even. They will not give you the refund. So that becomes very difficult. So if you are taking in home, make sure you are in very, good place where there is no external sound interfering with your exam. And then, of course, learning material, they provide a book, which is 600 pages, which I promised you. A summary of each chapter definitely you will be getting from our side. So it's a bullet point based summaries of each of the topics. So that we will provide. We will also give you long videos explaining the concepts. We will work with you every week to put a summary and Q&A. So all questions will be resolved. Uh, this is one of the caveated system they have launched, and this most successful program, certification program for ESG. What it covers, it's a short video. I hope it is visual.
As of 2022, 68% of retail investors were looking to invest in ESG, and 74% of institutional investors expected ESG investing to result in higher risk-adjusted returns. Being able to incorporate environmental, social, and governance factors into investment decisions is an essential step for anyone working in the investment industry. For more than 75 years, CFA Institute has provided investment practitioners with the knowledge they need to advance their careers. Our certificates are renowned globally as the gold standard, so you can be confident our curriculum will give you the skills you need to stay ahead. The certificate in ESG investing provides holistic coverage of ESG investing with a curriculum that is updated every year based on the latest research and trends. This comprehensive certificate will teach you the context for different approaches to responsible investing in consideration of ESG factors, all about the ESG market, relevance, size, scope, key drivers and challenges, plus risks and opportunities. The ability to analyze how ESG factors may affect industry and company performance and security valuation across asset classes. How to approach investment mandates, portfolio analytics, and client reporting. You can learn all of this on your own time with a self-paced curriculum. In internal interviews, participants who took the certificate in ESG investing said it provided them with the confidence they needed to join and participate in conversations related to ESG factors. They became the go-to resource and on-site teacher for ESG at their organization and were able to use their knowledge immediately. In 6 months or less, you could become the in-house ESG expert at your organization and have a certificate that demonstrates your mastery. Invest in your future today.
This is their official video where they promote CFA ESG certification. And of course, what you learn is it is a specialized for growth sector mostly. For career advancement, people are taking this course. It has a global recognition and expert insight, which you get through those ESG factors learning. There is a complete 3 modules only on understanding, and which covers 40% of the content. 40% of the content, 3 modules cover, and that's establishes the gold standard. Of course, it has a flexible schedule because you can schedule your exam anytime you wish to. They recommend 100 hours and 6 months. But if you work with us, within 3 months, you will be ready to take this exam. Testing online, the complete list is here. Again, this can be provided to you if you want. You can take in chat box and see in India where all they are conducting the exam currently. In chat box, I have already posted that. If I go to India here, There are 7 centers. If they have increased, that is good news for us. Oh my God. Okay. So yes, they have increased now. So Ahmedabad, Bangalore, Chennai, Hyderabad, Kolkata, Mumbai, New Delhi, and Trivandrum. So they have added 2 more locations now. Uh, uh, so we have 8 locations instead of 7. Trivandrum has been added recently. Wonderful. So those are the thing. Online, of course, they ask you very strict, rigorous type of scenario, which a lot of people can be able to maintain, like a screen resolution, etc. You can attempt it from iPad as well, and you need to have 1 Mbps. So for India, it's not a big deal. A virtual machine is not allowed because they proctor it completely end to end, and your microphone and webcam should be working. Of course, there is some readiness check, etc. they provide to you. Environment is the only concern area. Uh, you can even take some mock, test here. 10 to 12 great mocks. You can opt for that. And you can launch your exam anytime you wish to through your computer. So that's related to exam. Let's go back. Uh, of course, whoever has taken has promised a lot of things about it. Now, yeah, there is no prerequisite for this particular certification. It's a foundational certification, so it is applied to anyone and everyone. You are a chartered accountant or not, you can take this exam. Uh, yeah, you have to have a passport with you because that is required to get into this exam. They have other certification, as I told you. They have launched 3 certifications additional to it to just reduce the load on this particular program. Unfortunately, program still leads a lot of people, even though such a high fee, people are doing it. I hope my presentation is visible back. So syllabus, I wanted to cover that. Let's go and check syllabus here. So curriculum wise, of course, is a foundational knowledge, approach and application is their basic, which aligns with our value. That's why we have taken this challenge. And the diamond membership, this is our key program. Yeah. So every week for next 3 months, we will be learning about CFA ESG investing. And then next 3 months, of course, we every week we meet, we take some Q&A if somebody has question on the program or their curricula or they are planning to attempt the exam. And if they have a question, of course, we take that. But mostly it is open session talking about new development and new boot camps, right? So that's how next 3 months will be. So 6 months of complete journey with us. What we are covering is first chapter is overview of ESG investing and the ESG market. So both are now combined. Earlier, it was 2 chapters separate, ESG investing and ESG market. Now they have combined it. You will have 7 hours of video with us, which we have delivered on the same. And then we will have 2 hours, one session completely for this particular chapter, because this sets the boundary. What exactly is ESG? What exactly is ESG market? How big is this market? Why people are shifting to ESG concept? So size, scope, key drivers, challenges, risk and opportunity, all been discussed here. And then we also talk about how ESG is helping. So anybody who is even interested in managing their own portfolio, investment portfolio, how they can consider, why they should consider ESG investing as a factor into their portfolio. This is a good learning there. Topic weight is 15%, maximum 15% of the question comes only from this chapter. Okay. So that's a very good advantage there. Then comes the environmental. Environmental carries the equal weight, and this goes into detail of environment. I believe there are 170 pages to be exact, environmental factor. When we will go in that session, we require a minimum of 2 weeks to complete this. And so you will also have 2 weeks time to read and concise, ask right questions, and we will summarize it for you in one of those sessions. Again, 8 to 15%. minimum 8, maximum 15% questions will come from here. So 120 question generally comes, and out of that, 15% comes from here. This is a syllabus book. Again, I will make it available for you right away in the chat box. We will also send you links of everything. By the way, we have a downloaded copy. So we'll send you the PDF copy if you wish to. This is directly from their website. So social sector, of course, here we will cover the social factor. We explore those factor in detail, systemic relationship, all these factors like employee, community, all these, which is a part of social. We go and detail it, material impacts of the same on operation. Social analysis, country, sector, and company level analysis in social factor is unique composition for ESG investing. Whoever has no understanding of investment, even on their personal level, here we learn that. This is called top-down analysis, where you look into the country level analysis, which are the key drivers, which is driving the economy. Then we go to the sector or industry level analysis. In industry, why this industry is growing at particular rate, like health and healthcare industry is growing at 7%. So why it is growing 7% and how that impacts your decision in a stock investment is a biggest advantage in this program. So social, everybody talks about employee and community, but how that employee and community contributes to this country level, sector level development, and what is the key drivers there. The linkage, you will get it here additional. So that's an additional advantage learning this. Then governance, of course, governance is a major topic here because corporate governance always remains financial people favorite, as well as for lawyers. Presley, for you, it is a good chapter to learn because here they cover the international laws first, then they go country-wise laws. So they cover the complete governance regulations and laws, history behind it, why particular law has been brought in, like Sarbanes-Oxley, all those laws, regulations we will discuss in detail in this chapter. Of course, in the module of engagement in stewardship, this helps board of directors mostly. Why? Because here they tell you what kind of strategy you can deploy to engage your stakeholder, including your peer independent directors. How you should engage with them, how you should engage with founder, what kind of letter writing skill you should have, what kind of meeting skills you should have. All that is concised in 80 to 90 pages of this book. And of course, we will cover into 3 to 5 hours, 5 hours maximum we will spend on this. So you learn a skill that how to engage with your stakeholder and create a company which is on a stewardship or leadership position in ESG factor. Focus will be ESG, but how to do it, we will learn here. Then from this chapter onwards, last 3 chapters uh, mostly focuses on financial aspect of non-financial measures. As I have discussed and detailed it, and Gaurang, if you have not watched previous video, watch that 1 hour video. It's a half an hour. Half an hour is introduction of all our team members who are part of this particular cohort. Most of them are missing today somehow. We have to send them the recording. But next half an hour is pure. We are discussing that, how the CFA program helps you. So watch that video. Addition to that, these 3 modules are basically gives you a helping hand to make a judgment on non-financial measure, that because of this non-financial measure, of course, it gives you reputation to the company because you are a sustainably prudent company. You are into a stewardship of any ESG factor. Plus, you can convert this non-measurable stuff also into your financial models or your valuations or company valuation. So if company has a, say, L&T is, today price is $136 rupees, which has been crashed down because of their CEO talking nonsense about how the people should work, and specifically to Gen Z, who doesn't want to be, coached on work-life balance. They are more matured on that aspect. They know what is their borderline, and somebody try to teach them, being even Narayan Murthy, and both of them I love. Yeah, all of them who are saying 70 hours, 90 hours is they're saying good for the country, good for their company as well. But they are forgetting a very fine line there, which a good debate. We will have that debate as well today. just briefly, because it's a part of your social, right? That how to engage with employee and understand the culture of that country, that segment of people you are talking to. So here in ESG analysis, valuation and integration, we cover that portion, okay, in detail. Gaurang, you had a question, you unmuted yourself. You can go ahead and ask.
Sir, actually, as you said, I will go through that video. Uh, if you can just cover, because this is the first time I'm hearing about this course.
Okay.
Earlier, I have heard about course like SBR or something.
SCR it is.
SCR, yes, sir.
Yeah, GARP SCR. Actually, in that video, we have also covered about GARP SCR. We have covered both. We analyze it together. There is a one slide is there. You can just fast forward and go to that slide, take a screenshot, and you will understand the difference between these two. Both are equally reputable certification. And but SCR has a pass rate which is very low. And secondly, it has a limited application. Yeah, that's the only difference between CFA ESG and this. CFA ESG, of course, is very useful tool for people who wants to work with banking industry or financial service industry. It's the best course. There is no alternative to it. Why? Because it is developed by the financial people. And you can see that maximum focus last three chapter is on the financial aspect of non-financial measure. But if you compare the GARP SCR, it's mostly only one factor they detail, which is environment. So if you are an engineer, environmentalist, or you understand SOx, NOx, apart from greenhouse gases and their implication, and you are working with EHS, also it helps in EHS, by the way, Gauranji, because it talks about risk, right? Mostly it dwells upon risk. So second aspect of comparison is risk versus opportunity. ESG CFA ESG covers both part. Of course, that also they also cover both part. And now ISO has brought in I again we have discussed in detail. ISO has brought IWA 48 2024. A newest standard for implementing, and they consider both CFA ESG program material as well as they consider the SCR material. But SCR you have to be really specialized in it. Yeah, that's the only difference. And you will get a job opportunity with World Bank as well. With SCR, you get more prominence there because there are a lot of environment related stuff. If they are coming up with, they will hire you as a consultant as well as their employee. But when you do CFA ESG, all other forum gets open like WEF, World Economic Forum. If they have projects, they are talking to people. They prefer people with CFA ESG. Secondly, JICA, etc., because they are more related to the financial aspect and how it impacts the society. They are not too much focused on the climate part of it. So that's again a differentiator point. That doesn't mean SCR has a less applicability. They have an equal applicability in risk side. Yeah. So risk, if you are a FRM person or you are who is into risk management side completely, you have nothing, you have not done anything else, then that could be the ideal stuff, right? So that's the difference. Again, we have discussed that. Still, I will recommend look for the half an hour at least of that video. You will get a lot of wealth of information. Okay.
Sure, sir.
Then ESG analysis, valuation, and integration. This one chapter you can understand is a critical one because it's a link between non-financial measure of a company to financial measure of company, where you look how to analyze a company based on the ESG factors, not only the fundamental and technical analysis, but ESG analysis, right? You actually virtually they make you ESG auditor because they give you the checklist, right? Each of that we have covered in our recorded session, and we will be also covering this one. We will take at least 3 weeks. Yeah, why I will go very slow because Gaurang is chartered accountant. We have Bhaskar is chartered accountant, but Presley is a lawyer, right? Subodhji is an engineer. So I will go very slow. I will make a common footing for all, and then we will go step by step there, right? And it has a really heavy weight in the all topics. Up to 30% of the questions can come from here. Then, of course, comes the portfolio construction and management. Most of the people who are not in finance, they do not like this chapter. The reason being it is specific to the portfolio level risk understanding. So whoever has their own portfolio, I always guide them. Previous session, Nishant, etc. was there. I told them, do one thing. bring your portfolio. Don't give me the names of the company because that will, crack our head that this is good, this is bad. Don't give us the name. Tell us the industry, and you work on those portfolio, your own portfolio, applying this theory, and see how it helps you. That way, it becomes relational to people who have no exposure to portfolio construction or management, and also they do not know how pension fund works, how asset manager of pension fund works. For them, of course, I put a lot of reading material, which already have started from day zero. There is a blog on my LinkedIn page. Please go and read it. It talks about how a Canadian pension fund, how a pension fund, which is of a company called American Airline, got stuck by not following their fiduciary duty. And that's covered here in this chapter. That fiduciary duty of a pension fund has put them in real trouble now. Yeah, because pension fund has a different characteristic, right? We will discuss about it when we will go there. Just to give you a little idea, pension fund is not working for themselves. They are working for retired people or the people who are depositing fund with them. So they have two obligations. One, there should be monthly outgo that portfolio should create. So there should be SIP, which we know in our own portfolio basis. We know, right? We create some investment. How many of you do stock investment? Let me ask that first. In this four, we have a limited people right now.
Sir, very limited.
Very
I
limited.
mean, yes, sir. I mean, I'm not able to devote much time to it, but I used to do it frequently.
Okay. So do you have mutual fund? Do you have still some stock investment?
Yes, sir.
Okay, good. So we will work on that, right? So you will know that there is a system called SIP. That means it's a systematic withdrawal plan, SWP we say, right? You can create a portfolio which can keep giving you monthly income.
Yes,
Correct?
sir. Yes,
That
sir.
is what pension fund duty is. They have to give back to the retirees a constant income. How to link it? We know that. Bhaskar, do you do investment or you have any investments? You are on mute, I believe, or your mic is not working because we can't hear you. No, we can't hear you. Still, I think your mic is not linked well. Okay. Presley, do you do investments? Do you have any portfolio? Have you done any investment? You are the lawyer. So have you done any investment in past on personal level, I'm saying?
No, 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 no,
Uh,
I've not done that investment. I've been just the market.
okay.
Can you
You
hear me
have a
now?
stock market. Rajni ji, welcome. You are late today. We can't hear you as well somehow, Rajni ji. I think you are on mute. And Bhaskar ji, still you are not audible. I think you
Not
have
audible?
now you are audible. You are audible now.
Okay, okay, good. I
Rajni,
do I do have investments.
okay.
I do put it in mutual funds as well as in little bit on stock side.
Okay. So do you have SWP plans as well in your mutual fund? Mutual fund gives that handy, very handy. A lot of
Yes,
mutual fund have that.
yes, yes.
Okay. So if you have that SWF, that is one of the fiduciary duty of pension funds.
Pension funds.
And American Airlines, which case study we have detailed it, please go to my LinkedIn and I will send you the link in the group as well. I think it was posted. Check that. We have discussed that they failed it. And even
Oh,
BlackRock as a asset manager for that American Airline pension fund, they also failed it, right? And the
oh,
Supreme Court has to intervene and they have brought a law which is going to impact the ESG investing across world, right?
okay.
That's the threat we are now seeing, and there will be a lot of changes as well. And it's good because last few years people have lost value because of this gimmick which pension funds are playing with ESG investing, and the return has gone down.
Mm,
Okay, so it's good
okay,
for us, but those are the things which we learn here,
okay.
that what is that asset manager fiduciary duty, how he should create a portfolio so it can give monthly income to their
Income.
customer. And at the same time, the value of investment should not deteriorate, which has happened in 2008, if you remember, right? Mostly it was a pension fund who made the market go cranky. And
Yes.
the investment Lehman Brothers has to go out of business. So these kind of case studies we will discuss, and of course we will also give you enough reading material so you get mentally prepared. And it's very short article, means 500 words, means in 2 minutes or two. If you are a slow reader as well, 5 minutes you can finish. Okay, so that's my duty. I will do it for next 6 months. So Rajni ji, sorry, you were saying something, and then
Sorry, sir. Today I missed it. Some household commitment. So
makes sense.
I
Makes
got
sense. Even
late.
Subodh ji is missing. Two, three more people. Ramesh ji is missing. So no
So
worry.
even I could not make the payment also yet. So I will be making after this class.
You always make me,
नहीं नहीं, it's okay, sir.
stressful. I'm
It's
ashamed when you
आप
talk
business
like
में
that.
है
Please
तो
don't do that. Please don't do that. Money with you
yeah,
people.
I'm very much in. एग्जाम देना नहीं देना है वो बाद में देखूंगी.
Not
पहले
a problem.
ये कोर्स पूरा करती हूँ.
Not a problem. Okay, so we were just discussing how we have done only 15 minutes today. We started late as well. So look into the video of the previous 15 minutes. We will share with you. We are going to the syllabus, through the syllabus from the website itself, because 3 months we will be on this syllabus, right? We will push you. And what commitment I am asking, apart from boot camp commitments, few of you are also attending the boot camp, right? So there
Yeah.
I've asked you 2 hours of boot camp time and 1 hour extra for your reading. Here, you need to additionally invest 1 hour daily for 7 days. That's the additional commitment you will have apart from boot camp if you are joining few boot camps. Okay, so make sure you have additional 1 hour. So 2 hours of commitment. If you are working with us, next 6 months, devote for ESG. That's my request. Every week, of course, we will meet for 2 hours, but in between also you have to spend some time. Okay, then only it will become a cakewalk for you, and you will have a skill which has no value. It's a priceless which a skill which you will get it because it helps in your investment, it helps you in your regular life as well. And the final one again is focused on investment banking side, investment mandate, how you should create RFPs, request for proposal. So if you get a chance to work with a finance company and they are running their in ESG initiative, because now they are launching, and why we are teaching this also I will tell you, and why it has been included, you should know. Every investment companies, asset management company, mutual fund are launching ESG products. Yesterday we have detailed it that 40 to 50% of the asset under management is already converted into green. So all have a level of green. They will not come to your company if your company doesn't follow the green regulations. Yeah, be it bond, be it equity, whatever investment you are looking for. If you don't have that ESG compliances or ESG, inbuilt integrated urine system, they will not give you the money. And if the 50% of money has gone green, so you can understand the challenge in attracting the right funds, right? If you read this chapter, what it helps you with, and you get a chance to work with any of the financial companies or a company which is coming into financial domain like IRIDA. IRIDA is an Indian company which has green portfolios. And you get a chance to prepare RFP for them, request for proposal.
Request for proposal.
Yeah, for a product of their product, which they want to bring as a bond, bring as equity, then learning this will enable you that. Of course, it's a very specialized skill, but I will take it very slow and explain you the concept. And when you are planning to use it or you get a chance to work with any of those organizations, IRIDA, RECs, there are several companies which are bringing green portfolio and eventually the client reporting as well. You will use this chapter as a Bible there. Just flip it out. That's why a lot of people buy this book and come to the system because they get the ready-made material. And of course, the exam wise, it is not very important. You see, the least importance is given here, right? Because people of ESG also, CFA Institute also knows that this is very specialized stuff. If you get a chance, then only you will use it. That's why the exam wise, it doesn't have a lot of weightage. Okay, so syllabus, I have already sent you the links. All the links we will send it again for people joining late as well as in group. So you will have access forever. That's it on that side, syllabus side. Let's go back to our presentation. So we have covered now syllabus, why ESG is preferred. Also, we have covered yesterday and today. A framework of certification is this. That's currently, as you listen in their brief as well, 76% of institutional investor have an interest in ESG, and they give jobs as well as they bring products which are relevant to ESG. And 69% of retail people who are investing want their investment to be safe. The ESG brings this particular aspect in the business. The CFA Institute, ESG Investing, what it does, it gives you upside. If you see the statistics, ESG portfolio in S&P 500 as well as BSE 30, NSE 50, Nifty 50 has outperformed the Nifty 50 consistently for last 5 years. Okay. Another advantage is bring, which is critical to understand, it gives a bottom out as well. So when the portfolio goes down, like Nifty has crashed 1,000 point day before started 4 days ago because of the HMPV virus, this portfolio doesn't go down so fast. So it gives you a feel of blue chip portfolios, which has a bottoming out tendency. And in blue chip also, this gives a better resilience on the bottoming out. So your investment remains much safer than you are investing in even blue chip. That's what has been established. Okay. There is empirical study. You can just Google and find it out. Several empirical study has been done and this has been established. Still, because of some culprits like American Airline and all, some of the products have not outperformed. In India, there is a quant fund. How many of you have heard about it? If you do investment, definitely you have heard about a investment company called Quant Investing Company. Now they have a quant fund. Gaurang, you know, right?
Yes, sir. In US also, I think they have.
Absolutely. So
USA and India.
absolutely. So they have a ESG product and unfortunately could not perform well. Later on, people came to know Quant Fund has been even reprimanded by SEBI. They were doing some front running, etc. Okay. So these are the people who have really promoted well but could not fly off, right? That's why in India it is little subdued. Last few years, people are really not very keen to invest in ESG because they are not yet seen the value. But as I have told you in normal ESG sessions as well, world will not exist without ESG, right? Yeah, few companies still will not follow. They will love to because they will see as a cost. They will remain there. Like without quality, there are thousands of companies still, right? Only 50% adoption is there. 1 million companies currently follows ISO standard 14,000 and 27,000. 1 million, that's 1 million. And how many companies are there in the world? Massive amount, right? So still there are companies which are not following any regulation rules. But definitely that 1 million will be in this case 50 million. Out of 100 million, 50% company will follow, 50% will not follow because of the government regulation. In quality, there is no government regulation. The first concept which we will discuss today is the understanding of ESG risk and opportunity and why we should focus ESG with this lens. What I'm showing you in front of you on a screen is the top global risk by likelihood. This is little old data because this is what is provided in the book. So I'm referring that. Now in the recent 2025 book, I have not yet seen. What they have done is they have gone to WEF's website. So let's go to World Economic Forum website. And there we will get the current year data on risk, world risk, the critical risk which are there. So WEF Forum publishes every year top 50 risks of the world, which are going to be critical coming year. They always predict, yeah, after the meeting, they will come up with. So this is 2024 data, which is here. Let's go. I think there will be summary key findings. Let's see the key findings. Yeah, you see these figures. These are the critical figures which I have summarized for you in that sheet. Is it visible or do I need to increase the size?
Little bit increase in size would help.
Okay, fine. This is their report. This I have already published on my LinkedIn. Summary of the same is also published. If you want to really get a 2-minute gist, you can go to our LinkedIn page and you can find the summary. But here, 2024 data has been published. And this is the critical one. Let me increase the size now. It will help me to increase. What you will see out of top 5, yeah, risk, 4 are from ESG factors. Out of top 5 risk, 4 is from ESG factor. Now, cyber attacks, AI generated misinformation, disinformation is part of governance because it links to your branding and your corporate finance. Societal is, of course, social factor, and extreme weather is environmental. So if you see top 5, 4 are coming from ESG factor. That's why we need to learn about it, right? And this is their survey of top CEOs and WEF every year they convene in Davos forum. So they interview them and then they prepare this particular document. So this document has a lot of value, yeah, because it's coming from the decision maker's point of view, right? And it is not just a survey somebody is conducting; it is a real stuff. Second aspect, which is also critical for you to know, is last 2 year top 10 risk if you see for the world businesses or world countries. Again, out of that, 70% is coming from ESG factors. So if you don't have ESG factor understanding, you will be lost. Geopolitical is, of course, here plays a big role along with technological risks. But major risks are ESG risk. Top 10 year, if you see, you will see actually environment remains the constant top 5 there. Environmental challenges and risk for 10-year period, coming 10-year period we are talking about, okay? They consider all the visionary and intellectuals of the world, consider in top 10, 5 ones are coming from environmental side. And the last one also is environmental actually. You see that first, second, 5,
Yeah.
and the last one. So top 5 is coming from environmental side. So you can understand how critical this ESG factors converts into risk. That is why we say the current driving of investment happens by looking into the risk of world, right? The first you look the global outlook, how I should invest anywhere. And when you talk about that, you look into the risk. And this statistics helps any decision maker to decide their company risk. So every company prepares a risk register, Gaurang, right? Most of the companies which are little
Yes, sir.
legible about it, right?
Yes,
In
sir.
India, generally, it is prescribed by the auditors that you should have a risk register. So if you prepare a risk register, you derive the risk from the world first, then you go to country level risk, and then you go to industry level risk, and then you go to company level risk. That's how you define the risk in your books. So risk register initiate from here, and that's how any investment happens. Then comes a major aspect which is relating to regulatory pressure. Yeah, obviously there are 3 reasons why ESG has come into fora and people look into it. First is the risk, that climate risk is the major risk for everyone, then the social risk, and then the governance risk. That I have covered, showing you a world graph that all over the world, all people are saying that importance should be given to ESG, otherwise your company cannot survive. That's what risk means, right? Then comes regulatory pressure. This graph specifically shows you the same, that all over the world, irrespective of which government, is it a Kenya government, is it a European Union government, is it a Indian government, everybody has responded by putting a mandatory requirement or voluntary requirement or combination of both. And that response, you see more than 800 institutions, companies have even agreed to a PRI responsible just by 2020. Now, this number has gone to 5,600, not exactly this number, but I'm saying overall number, where even banking institutions have pledged. So if you consider not only the government and government institutions like Ministry of Government, yeah, or subsidiaries of public companies. If you consider those, there are 800 of those companies across the world, not company, the countries and institutions, government institutions have committed to principle for responsible investing. So wherever they will invest, either they will follow SFDR, TCFD, TNFD, or CSRD. These are the ones. Now it was forthcoming in 2020. Now it's totally in and it is working. And that is why regulatory pressure and regulatory requirement also have pushed countries and institutions to follow responsible investing, which is the core of this curriculum. Of course, this is the book which we will be sharing with you very soon, maybe tomorrow itself. The first thing in Monday, you will have it. And this framework, it says test the framework. If time permits today, we will just go through that pages. There are 30 pages of that curricula. This year, what are the changes? This year advantage, they have brought it to 8 chapters instead of 9 modules. Okay, that's the advantage. They have merged the first 2 chapters. So let's now go and get our hand dirty with ESG investing. And with that, I will stop. Again, I will not overload today. This is the first session for you. So I want you to brood upon it. We will give you the reading material which you have to read and come next week when we will really kick off the first session of ESG investing. Today is the first session as well, but today is kind of priming the pump. Next session, we will go into get our hand dirty. So you will be required to read and come. Okay. So what is ESG investing? There is no commonly accepted definition here, approach or underlying set of beliefs for ESG investing. But there is a common definition, common nomenclature which people use and which says, again, I always divide any definition into 3 parts. So it becomes recognizable and rememberable, memorable, sorry. Is first part is it is explicit and systemic inclusion. Okay. What is the first part? That ESG investing is a way of investing or way of taking decision making. For board of director, I always say, think like a decision making. Don't think like a investing. Of course, investing will happen through you only. You have that mandate to sign those papers. But if you are not running a portfolio, you are not sitting in a financial company, whatever I say as a investing, think as a decision making. So when you do anything, any decision making with explicit, means saying that I am using sustainability or ESG factor while I'm making that decision, or have a systemic part of it, means there is a systemic logical structure to your decision making of ESG issue being included. That's the second part. So first part is should be explicit, it should be systemic, it should have a system. Second part is it should be about ESG issues, not about anything else. But any decision making you are doing, for example, you want to grow 20x in next 10 years. That's your vision. If I, as a board of directors sitting on that board table, I will take that decision of going 20x by considering ESG values in it. I will ask my board members or my financial team, tell me that, okay, 20x financially we are going, what will be our status on ESG in that regard? What it means, how much I will impact environment, and can environment factors will contribute to this 20x? And if yes, what, tell me the quantity. This is you can do by CFA curricula. It gives you a systematic arrangement of the same. It will tell you that what exactly out of 20x will come from environment side as an opportunity and by reduction of the risk. Both it can help you with. Same goes with social. Okay, I want to go 20x in 10-year time. How many people I am going to recruit? How many offices in different country I will open to reach that 20x? People will give you that number. You analyze in a way to establish, can I maintain my salary scale which I have it now? Generally for a startup, that's a challenge, right? Currently, they don't pay anything to anyone. They ask them to do free work. And then suddenly you tell them, go grow 20x. Have you thought about your employee reaction to that 20x? And that is why now ESOP is a fundamental right kind of stuff for a startup. How many of you have seen the new startup IPOs has their employee becoming millionaires? office boy becoming millionaires. Have you observed that stuff recently? Anybody who has followed Swiggy, have you followed Swiggy case?
Swiggy, Zomato as well.
Zomato as well. Their employees are becoming millionaire. And how they are becoming? Because e-shop is became a fundamental right for startups. You grow 20%, I will support you, but give me a part of the company, right? Nobody
Right.
works without having a kind of equity or promise to equity in their company. And this is now most of the startups are considering. And even in their first round, they will allocate a pool for eShop. They will tell their investor that I'm doing that. So this is the social part. This social factor helps you to make that decision, right? That you will have 200 employees or 20,000 employees at that point in time. Can I maintain their salary, equal salary, equivalent salary compared to employee versus a CEO? What will be the salary gap, right? How I will maintain, because at that point in time, I have to hire a very big honchos. He comes into play, Wipro will go down the drain. They hired an international CEO for their company. And then finally, they have retrieved back from their decision within 2 years. This was a rare case for Wipro. Ajim Premji doesn't work like that. He trusts their employee for a long time. However, he is very ruthless in firing. Vivek, if anybody know the history of Wipro, they must have heard a namesake called Vivek, a US employee who has been taken for a ride, and he was playing as well. And then Wipro has really gone ruthless with him. So they are known for managing their employee well, trusting, and they are also known for community services, charity, CSR, all that. But they were stuck with this situation where the CEO was really getting exorbitant money. He was a European guy who really could have done a lot of stuff, but unfortunately he failed. And he failed because of the employee support was not there as much as he wanted. Let's be honest about it, brutal about it. And that was one of the reason in social factor we learn across our boot camps. I always focus there and I tell people, do not ignore your employee and community whenever you are growing faster. Yeah. Otherwise, you will never become Tata. You will be always remain a family business, right? And always being challenged by others, outsider. Adani has missing that part. Thankfully, uh, Adani has done a new stuff in Kumbh Mela. They are sponsoring ISKCON this time. Just going out of context, but I'm saying that they have understood that they have to manage not only the politics but also CSR around the politics. So this is one of the definition parts. So two part we have already learned: explicit systemic inclusion of what ESG issue in what ESG analysis and investment decision. These are the three parts of a definition of ESG investing. I hope it is very clear. I took a little time, sorry, but I thought that you should have a right footing to start with. Is it
Absolutely.
okay?
Yes.
Okay. Okay, so investment discipline that consider environmental, social, and corporate governance criteria uh, to generate long-term competitive financial return and positive societal impact is defined as ESG investing. Simple definition, right? ESG criteria for long-term competitive financial return, not lesser financial return, which is the case study I have already developed for you guys to read. I have developed that case study. Why? Because whenever I take a term long term and competitive financial return will be the key word here. Competitive financial return, which American Airline Pension Fund was enabled to give to their shareholders, which is their pensioners, right? They are in trouble right now. And this is a common fundamental which we will be learning very soon. Of course, it is based on the United Nations principle for responsible investing. This course itself is a $4,000 worth course of United Nations. Mostly company sponsors it. You will be learning this under CFA program, all because it's based on that fundamentals. Forum for Responsible and Sustainable Investment, USSIF, which is a Sustainable Investment Forum, is another document which was referred to develop ESG investing. And CFA Society is always feeding in the data, and I'm part of CFA Society as well. So, of course, CFA, there is a comparative understanding you have to understand from CFA ESG version 23, 24, and 25. There is a small difference. Every year they change their program by 20%. We will see that. So even though I'm referring to old book, you will know what changes has happened under version 5. This is the version 5. This is the 5th year of their new program. So as I have talked about it, already they have merged chapter 1, which covers, it will start with what is ESG investing, which I have tried to showcase to you. In 2024, it remains the same. In 2025 also, it remains same. Minor changes has happened in chapter 1. Chapter 2, if you see, there is again some part they have removed and they merged it this year. This year, there is no chapter 2. Chapter 2 is merged in chapter 1. So history anyway is gone. History of ESG investing is gone. But I will give you little brief, and in my video, it's detail, right? I start with 1700, that how ESG in form of religious welfare has came into play, right? Earlier religion means hardcore religion. It was kind of a right. You must have learned Constantinople, and then a crusader, Christian crusader, and then you had even Muslim crusaders, etc. Yeah, so that part was a harsh part of religion. Then slowly religion understood if they really want to be relevant to people, their caste, creed, and their society, they need to do a CSR, right? And that's how the it came in. So all that we have detailed in our video. If you want and you are interested, you can read it and go through that. Otherwise, you can just fast forward and move ahead. ESG investing in number, this is an important chapter. This remains still relevant in 2025 as well. This showcase you that how investment industry is growing with ESG. Market driver challenges, we have already learned about the same. Asset manager, fund providers, all this basic concept in investment, I will try to cover. Why? So if I use this terminology, you do not get lost, right? And you do not, curse me saying that I don't know what is asset manager. You are telling me asset manager. Okay. So I will clarify that in detail video. We have gone step by step in summary also, which we will do every week. We will cover that. Module, of course, one has seven learning outcomes. This whole program is derived through learning outcome. And you will see my program is also always have learning outcomes. So you have to decide what you are, before reading the chapter, what you are going to learn from that chapter. So first chapter is specifically have definitions of ESG in ESG investing, where financial performance try to meet with social responsibility. That's the juncture you have to understand. Core principle, of course, is the diverse approach. You cannot have one approach to any decision making. You should always have, more variables for making a right decision. We learn that. And then key concept, we will uncover the benefits and risks there. ESG investing approach starts with responsible investment, then thematic investment. They are theme-based investment nowadays. And then there is a socially responsible impact investment. We will see that also very clearly in next session, that what does this all mean? What is impact? You must have heard a lot of company does impact investment. Yeah, they are talking about impact. I want to generate CSR fund for impact, right? We will learn that impact. We will also learn that what is the responsible investing and what is the conventional investing. That difference we will clarify in lecture number 1 itself. Yeah, which will happening next weekend. And then of course, what is the difference between CSR, triple bottom line, and strength and limitation? This we have covered in most of the programs as well, but if you want, we will cover it once again. Benefit and challenges in ESG integration. We need to know that first is the financial performance, that I want to take additional safeguards, but I do not want to compromise with my returns. That's a normal theory, right? Greed is a good, is one of the movies. This word was coined of 1997, where greed is good is the word used in the stock market. So that remains, even though you bring ESG, you bring thematic, you bring impact, but my returns should not be lower than the market, right? That's a criteria. It's a kind of conundrum which we will try to address. And how you do that? By incorporating ESG factor. Of course, you are doing merger of finance and social values, but also what you do is your financial performance should increase while reducing the risk and enhancing the long-term value creation. So in a year, you might not outperform the whole market, but in 10 years, you will definitely outperform the market, which establishes a case for you, which American airline has failed. And I am going to refer, look, whatever material I will give you for reading, I will refer that material all the time while I'm discussing. So next time any blog post is posted in the group, trust me, it will not be more than 5 minute read. Do go and read it because I will be referring that. So you will not be lost, right? So American Airline failed to do that. They were not able to give in 10 years time the return which a pensioner should get. And that's why Supreme Court of USA has put a penalty and they are going to take a strong action on them. Stakeholder engagement is the another benefit along with a challenge which ESG fosters, ESG integration fosters, because it fosters a stronger relationship with the stakeholder by demonstrating that, look, we are here to take care of my employee, my governance, my climate and planet, but at the same time, I'm committed to the long-term value generation. I'm not saying that at the expense of my company, I am doing all these activity. That differentiation, we should bring it in. And of course, systemic stability is the third part, that any crisis comes into market, my decisions should remain strong. My investment should remain resilient. Yeah, it should not go down with the market. That's another benefit which you get through it. ESG materiality and reporting again is a critical topic here, which we cover in boot camps mostly. But we will also explain you next time. There are three types of materiality. Two types are now in common denomination. First is, of course, all regulators ask for is, which is financial materiality of your ESG initiative. How you are identifying financial impact of your topics, ESG factor topics. And the double materiality says that inside out, right? How it is also the action, ESG action, which you are taking, how it impacts the environment or social or governance of other companies or other parties, outsiders, also need to be established. That is double materiality. Dynamic materiality is a very recent concept which talks about you not only acknowledge and that there is a relevance of ESG factor in your company and it has a material issue for your development, but how it changes over a period of time with you taking action or not taking action need to be established as well, right? It's a very interesting stuff which we will try to dwell upon some point in time, not tomorrow or next lecture. Of course, the first chapter also covers the first module, which we will go in detail next session, is ESG mega trends. So mega trends again is used in whenever we talk about investment. ESG also has certain mega trends. Which are those? Climate change is the first mega trend, which is a critical topic across world. Everybody is talking about that how global transition is happening to low carbon economies. All company has to go there. Why? Because they have a Paris climate agreement of becoming net zero at certain point in time, right? So how that transition is happening to low carbon economy is a massive mega trend. Why? You go to Nitin Kamath, all the people who are related to a lot of boards, etc. They are talking about it, that major growth will come from global transition, from a carbon guzzling economy to a low carbon economy. Clear? That's the first mega trend. We will detail it little further with the context of the book. So read the reading material come. So I will do the summary of the same, how that is happening and what book is recommending. And then comes the demographic shift and technological disruption. All three of them are creating a systemic impact because of ESG megatrend. Okay, so that's a critical topic we will be learning. Then last part of that first chapter talks about reflecting ESG in investment process. So strategic asset allocation, security selection, and shareholder management. Again, these are three terms which are used in form of investment. We will go in detail what exactly it means. What is SAA, TAA, and how in investment fraternity these are used and what is the implication of the same. So I will define it for you. We will go very slow so you understand this last part of first chapter. Make sense? Of course, after this, the ESG market they have added in first chapter, so we'll cover that as well, right? So every company has these three key ESG initiatives they are taking. First is the UN Global Compact, is one of the voluntary initiative which covers the financial institutions where they expect businesses to align themselves against 10 universal principles. So UN Global Compact, which is also behind GRI reporting, United Nations Global Reporting Initiative, they also have 10 principles which you should align with. So that is the first ESG initiative most of the company are adopting. Second is TCFD. You will hear SBI, Infosys, Wipro, all of them not only following GRI or BRSR, they are also following TCFD. We'll see SBI report on this context. It's a massive report. It is always recommended that read the SBI and Tata Steel's sustainability report. We will cover one of the session. Of course, the next 3 months is only brooding session, so where we will take the practical case study, specifically the Indian context, right? We'll bring that, we will learn about it, how they are same principles, how they are converting into TCFD. And then, of course, SASB is another standard which has come into play, which is IFRS S1 and IFRS S2. We will also look into the same, that how it is impacting. Last but not least, you have to understand that there is a now new headline for schemers that you have to understand the AI implication, artificial intelligence implication in ESG initiatives. Okay, we will learn about that when we will go into ESG market discussion. With that, I come to an end with my session for today. If you have any question, we have another 10 minutes to take and discuss about the same. Or otherwise, we will meet next week and we will start from chapter number 1, for which reading material will be sent today itself, right? So be vigilant on that. I will also send you the link of that previous pre-read material, which is about American Airline being stuck with their fiduciary duty, and all other reading material which is required. I will also share with you the book. Yeah, whoever is interested, I will share with them. Of course, it is a limited circulation book because I am contravening, copyrighted stuff. So I will send you the ESG book, which is 600 pages, and don't get afraid of it. I will cover page to page for you. Okay.
So when is it going to be the next class? Sunday or Saturday?
Sunday.
Always Sundays? At 11?
Always Sunday. Always Sundays.
Generally 11?
Sorry?
Generally
11 o'clock. 11 o'clock. 11 to 1. That's the timing we will keep. If there is a change, of course, you will be intimated. And if we are bringing sometime, if Saturday it suits everyone and there is a holiday or there is something, people are traveling, I always adjust my class. Rajni, you to definitely know. So don't worry on that regard.
So the boot camp will be starting later on. First, you will be finishing this.
No, boot camp will be in between, right? It will be in
So
evening.
that will be addition.
Yeah, that is additional, right? In evening session, like we are having right
We
now,
had earlier.
we broadcast. Yeah, so it will be definitely there for 8 days.
Yes.
And boot camp happens after 1 week gap or something like that. So you will always have that advantage. That's why I'm requesting 2 hour commitment from your side and 2 hour commitment from my side on this. And in 6 months, you will have a new skill.
Let's see, sir.
Good.
Anything
All
else?
are there. We have Mr. Bhaskar and then we have